Hello and namaskar. This is Neeraj here and welcome back to my channel Financial Market Analysis Twist by Neeraj Shah. So in today's video I would discuss something regarding the investment principles and more importantly about this markets in the face of US dollar appreciation and its implications on the stock market and the sectors particularly. But before starting this video, I would request all of you to please subscribe to my channel if you have not yet subscribed, and also big thank you to all those who have subscribed. And if you like this video, please give a big thumbs up and please share it with your maximum friends. And also it's your duty as a subscriber to pass this video to maximum people so that maximum people can benefit from this. And please keep in mind that my channel is not like many of these channels which gives very simple basic ideas and very common kind of talks about what is market and actually today this happened, okay, tomorrow this will happen, this is the news. I am into predictive analysis. As I told you, it's different, and I give the prediction based on certain data and all this, my understanding of everything. So I request you to please watch this video till the last moment so that to us to get the full idea about this particular aspect of the investments. Okay, so let's start this video without wasting much time. But before starting, I would just like you to because I get many queries regarding I lost this much money and I put 10,000 rupees and I put 20,000 rupees into this stock. So I would first tell everybody that the stock market is not a gambling casino. So when the market is rising, everybody wants to join, and when the market falls, everybody wants to leave. So this is not the way. Stock market is high risk and high return. So a risk reward ratio is there. If you want to take higher risk, you may get higher returns. But if you are not for the risk at all, then you should not be investing in the stock market, because stock market is a long-term investment and long-term wealth building. It's not that you put the money and the market has come down. Nobody can predict these kind of things because if we would have been predicting that kind of things, we would be God, and then no need to do anything in life, right? Why I should, even this channel. So you should understand that we take a lot of efforts and a lot of research, but still at the end of the day, market is not nobody can predict market. Market is its own way of operating. But over a long period of time, if you are into the fundamentally good stocks with a good management and the sector which has some kind of a potential growth and all this research analysis one has done, you definitely would be making money, much more money than any of the other investment forms. So this is an investment. This is not a one-time shot at the casino that you get it. So please, if you don't have the spare money, that is the basic principle. That much money you should invest in the market, which you can forget. Means it's like your savings, which you are not going to touch, which you don't need for your any of this purpose. Out of that only you please come into the market and put money. You don't try to from this day-to-day investment, day-to-day money, and then try to put it to the market thinking that after 1 month it will double, or after 1 month I will get 20% return and I will be able to withdraw from the market. No, this is not for that. This is for those who can forget that money which is not required for your immediate needs. That much money only you should put in the market. Okay, enough of this principles gyan. In today's video, I would like to talk about this US dollar appreciation, if you know, and its implications on the stock market and particularly the commodities and metals stocks. So, if you have seen this in last 2.5 months, that is from the what do you call August, from June, month of June till the August till now, you will see that US dollar has appreciated 4.8% against euro. So it has appreciated from 1.226 to 1.167 against euro. So for each euro, which before June you were getting $1.226, now you get, now means as of the Friday you were getting, as of Saturday you were getting 1.167. So what are the ramifications of this the strengthening of US dollar? Particularly metals, particularly copper, steel and iron have declined by 8%, 1% and 22% respectively in this last 3 months. From June to August we are talking about. Aluminium and nickel have appreciated 8% approximately, and whereas the prices of zinc and lead have not changed significantly, it has remained at that thing. And Brent crude has declined by 3.5%. So these are the basically, against because of how the commodities have reacted. That is what I just wanted to share it with you. So major ramifications of this strengthening of US dollar has been the depreciation in the prices, reduction on copper, steel and iron ore significantly. Okay, so we, as everybody knows that, recently in last week only the market came to know that US Fed is going to taper its bond buying program from the next month of September. So basically this is bond buying program was, that where US Fed is buying treasuries of the bonds from the market and releasing that much money, dollar, into the market, and that's what it increases the liquidity, and that's what it is blowing up the stock markets all over the world, and particularly all this money finds its way into the emerging market and the assets, particularly metals, commodities. So that's how, and US dollar was also depreciating because of that bond buying. Now US FDAs tell that they will be tapering that bond buying purchase or reducing that bond buying program. So from next month itself onwards to control the inflation and also, so this direct ramification is that US dollar will strengthen further. So, okay, so even if it has strengthened in last 3 months because of these talks about, but now US Fed has actually come up and told that we will be doing this bond buying program, or we will be reducing that bond buying, tapering of the bond buying program from next month. So this is where I believe, this is my my understanding from this market and so my view is that the US dollar can further strengthen or appreciate against euro by 5% really in the near term. It can come to 1.125. So for each euro which you are now getting 1.167 or 1.17 dollar, you will be getting only 1.125 in next 2-3 months time. I mean, I think this is what the US dollar will do if the Fed really, it depends on the how much Fed, it depends on the quantum of the Fed's tapering. So but this is my understanding is that the US dollar can appreciate by 5% further against euro, and it can come to 1.125. This is what the first level of when it can appreciate. So direct replication is that this can further lead to the outflow of funds from the emerging markets like India and other emerging markets, and these funds may go more into the US markets because the interest rates may rise. Okay, the bond yields may rise in the US market, and that is why the funds from all this can be withdrawn and pumped into this US market basically. So as a result, metals like copper, steel and iron ore, which has run up significantly like 20-30% in this year itself, it may expect to further decline by 10%, particularly this copper, iron ore and steel. So these are the three major metals which we believe that there is a scope of further declining of the prices by 10%. And Brent crude may decline by 5 to 7% more from. So basically what it can happen is that it can come down to say $60 and below, or around $60 per barrel in short term time if the US dollar strengthens. So but the point is that it will not lead to much decline in the prices in India, because of this strengthening of US dollar will also lead to the depreciation of rupee, Indian rupee, INR against USD. So that way it will balance the prices of diesel and diesel petrol in India. And further ramifications can be that because of this decline in the prices, the earnings of the metals and commodities based stocks would decline significantly. This will not only lead to the reduction in the EPS, future EPS, but also because of this kind of a negative sentiment because of the prices declining, it may reduce the P multiples also. So double squeeze can happen on these metals and commodity stocks in the time, in the near time. And basically, particularly for the copper, iron ore and steel based stocks. But as far as the aluminium and zinc and lead and nickel, you may not find much reduction because of this fundamental aspects of this metals. Particularly, there is a short supply is there, and also because of this Chinese short supply, and also because of this electric vehicle, more and more usage of that, more and more usage of alternative fuel based theories. So because of that, you may not find much reduction in the prices of nickel and aluminium and zinc and lead. Though the prices may not now you will see that because of this trending of US dollar, the prices of metals and commodities can, particularly iron ore, steel and copper stocks, can further reduce by 10% in the wake of this US dollar. So if this is the time when you can you can actually book some of these profits into this stocks, and then wait for the correction and wait for the US dollar appreciation to stop, and when that the new something US Fed will come up with this, or market will adjust already by this decrease of this stock prices. That is the time when we have to look at it. So this is what I just wanted to share my thoughts regarding US dollar and its ramifications on particularly copper, iron ore and steel stocks, and aluminium, zinc and lead, and Brent crude. That's it from my side, and we'll see you again next week with some new ideas. Till that time, ciao from Neeraj from Moscow, and love you all. Take care. See you.